Good morning, everybody. Hey, did you miss me? It's John King. It is Friday, the 5th of December. And yes, I took the last couple of weeks off, took the family on vacation the week before Thanksgiving. So you missed me the week before Thanksgiving and the week of Thanksgiving, but I am back. You get your fix of me now and going forward. Holidays are holidays. Family is super important to me. And so I will continue to make decisions on prioritizing my timing on certain things, and sometimes I'll miss this live stream. So hope you understand. Anyway, let's dive in. A lot is going on. I want to prepare you for the new year. We're in December. Can you believe it? Christmas shopping. We got 20 days until Christmas, and it's a great time of year. I love this time of year, and first and foremost, I want to express my gratitude to all of you. Thank you very much for watching and for following and allowing me to help guide you in your homeownership journey. And let's dive in and talk about what's going on this week. So first of all, last week we had the new loan limits were released for both conventional loans and FHA loans. I'm not going to go through them all, but what I'm going to say is we went up by about $26,000. So conventional loans are the maximum that you can borrow when you're putting a small down payment. Anything above that becomes a jumbo loan, and you need bigger down payments. Now, there's certain markets, certain counties within the United States that are considered high cost markets, and those we can go higher in purchase price. The problem is, as soon as you go over this conventional limit, the guidelines change. You can no longer put only 3% down. If you're in a high cost market, you have to put 5% down. You don't get as good of interest rates. Your rates are a little bit higher when you're in a high cost market. Certain down payment assistance loans either don't go into high cost or they charge you an extra fee when you're in high cost. So anytime you can keep yourself within the high cost limit, you are under the normal national limit. Even if you're in a high cost county, you are better off doing so than putting yourself in a position where you're paying that extra cost for being high cost. Having said that, the conventional national limit is currently $806,500 for 2025. It is going up to $832,750. So that is a $26,000 increase nationwide, and FHA is tied to that number. So FHA's loan limits also are expanding, but here's the problem with FHA. FHA says, well, here's the minimum and here's the maximum, but then every county, they're recalculating based on the average home price within that county. So even though we went up by 3.3% nationally for conventional loans, which means the FHA maximum went up by 3.3 and the minimum went up by 3.3, but your county may have stayed the same or gone down. Because if you're within those brackets of the minimum and the maximum for FHA, then it's about what is the average value of a home in your county. And if that dipped, then your FHA limit went down, even though your conventional limit went up. So there are tools. You can reach out to me and I can give you the tools, but there are online portals through Fannie Mae, through FHA, that you can look at your particular county, and we can get you that information if you want to look at that. But that's one of the things that I'm an expert at in helping you navigate the waters as you're deciding between loan sizes. Now, here's the deal. The limits, timing of when you can use it. The limits for conventional loans, I can use starting today. So if you are looking at that price range where, hey, I am trying to buy a house that is, $900,000, and I didn't want to have to put down $100,000 or $90,000 to get under conventional limits. Well, now you can get under conventional limits only putting $70,000 down. So if you're in that price range of between $850,000 and $1 million, this makes a really big difference for you, and you can use it immediately unless you are using a down payment assistance program like CalHFA. They won't let us use the limits until after the first of the year. So that is something to be aware of, and you can talk to me specifically about your timing situation. FHA's increased limits start with case numbers assigned after January 1st. A case number is assigned before we order an appraisal. So could you get in a contract right now using the higher FHA limits that might apply? You can. The problem is we can't order the appraisal until January 2nd, which delays the entire process. And is a seller really going to wait over a month on your appraisal contingency and your loan contingency because you didn't start it early enough? That's the catch-22 when it comes to FHA and their loan limits. You really need to wait until the second half of December and really right around Christmas, New Year's before you can be writing offers using those higher limits. How does the higher limit help you? First of all, the higher limit helps you because it is giving you access to the least expensive money at higher loan amounts. So you can buy with a 3% down payment on a higher purchase price. So you can, if you're right there against that limit and you couldn't get the house you wanted because you're just coming short, this helps you to grow your, to raise your offer amount that you can offer. Obviously, all of that is going to be raising your monthly payment, and that payment comes down to interest rate. So really, a lot of this comes down to affordability. How is this going to impact affordability for 2026? These loan limits are not going to make a big difference. It's a small segment of people that are right at that cusp. If it's you, it's huge. But for the average person, it's going to make zero difference in their purchase. And so what does this really have to do with? It has to do with helping those few people, but it's also helping a lot with move-up buyers. Because our move-up buyers are saying, hey, I want to sell my current home. And I've got a lot of clients right now, who own a home right now and they want to buy something else. This is the perfect time to do it. Matter of fact, I got off the phone a minute ago with a first-time home buyer. I know I'm saying move-up buyers, but in this case, I got off the phone a minute ago with a first-time home buyer who issued a pre-approval letter to him, was talking about the next steps and when they're going to start shopping. And he said, probably right after the holidays. And I said, whoa, time out. I don't want to rush you or pressure you, but I want you to understand the opportunity you have in front of you right now. Because most people don't want to buy or sell a home during the holidays. And he goes, yeah, that's kind of what I'm thinking. I just want to relax during the holidays. And I said, great. But big part of the home buying negotiation is how many people you're negotiating against. And it's about how strong of a position are you going to be in compared to the other people that you're writing offers against. And so if you think about it, right now, if a seller is willing to let people walk through their homes during the holiday, they better be pretty serious about selling their home, or they're going to take the house off the market and they're going to put it back on the market in January. So the houses that are on the market right now are indicators that those are highly motivated sellers. And now as a buyer, you're saying, well, okay, but there's other buyers that are probably going to buy that. But a lot of the buyers are thinking what this client thought, which is let's wait until next year, which means there aren't as many buyers out there, and you can take advantage of good pricing right now because that seller is motivated. Typically, we see prices start to take off late January, early February in a normal cycle. And really, they really start moving more in March, because what you've got is you've got the buyers that don't want to start looking in in December because it's holidays. They hit January, they're like, okay, well, let's start getting our pre-approval ready. Let's start doing this or that. And they start writing offers in early February. It's almost always after Super Bowl weekend that offers really start taking off. Well, get ahead of that curve. And that's the thing that you want to think about. And for move-up buyers, what this means to you is it means you right now, have the best opportunity to get a contingent transaction put together. Contingent transactions mean you are contingent upon selling your home and finding a new home, and you've got to build a daisy chain of multiple transactions. And I see more of those around the holidays because the people who are transacting right now really are motivated to make it happen, and they don't have a lot of other people to choose from. And so that's the key that I want you thinking about when you're looking at strategy and how do I strategize about timing right now is as a move-up buyer, right now is a great time to be thinking about strategy and to be thinking about what's the best way for me to get from the home that I'm in right now to the home that I want to be in and to get the best offer and best deal I can put together. Speaking of move-up buyers, there are lots of new tools right now as far as bridge loans are concerned to help you make that happen without being contingent. So if you are in any way thinking in the back of your mind, hey, I think maybe I want to buy a house and sell the house that I'm in right now, you need to talk to me. You can scan the QR code right here and schedule an appointment to talk to me, and we can talk about what your options look like, because there are more and more options that maybe we can do a bridge loan that's going to make your mortgage payment for the next 6 months so that you don't have to pay the mortgage payment on the house you're moving out of for 6 months. There's some really cool scenarios out there. Now, what's going on with interest rates? That's the bad news. Actually, it's not horrible. Rates are actually, they're repeating the same pattern we have seen over the last 3 months every time the Fed comes to a Fed meeting. So next week, Tuesday and Wednesday, the Fed is meeting, and to a T, Every time we've seen rates drop to their lows right before, and then what happens? The moment that Jerome Powell starts talking at 11:30 a.m. Pacific time on Wednesday, he says something that causes rates to shoot up, and then they move up for the next 2 to 3 weeks. That has happened consistently every time the Fed has met since September. So we're headed into another Fed week next week. I don't expect anything to be different. I think that if you are looking to buy a home or you're thinking of refinancing a home, now buy a home, you got to be in escrow in order to lock your rate. But if you are in escrow and you're waiting and timing rates and saying, well, I think the Fed's going to drop rates next week, please look at history. Last year, every time the Fed dropped rates, rates went up after they dropped them. This year, every time the Fed dropped rates, rates went up right after they dropped them. Why? Because right now, the market is super excited that the Fed's going to drop rates and keep dropping them. And every time when the Fed drops their rates, they turn around at 11:30 in the morning and Jerome Powell says, maybe we're not going to go as fast as we think we are. Last month in November, end of October, Jerome Powell came out and said, hey, we're dropping rates, but a rate drop in December is not a foregone conclusion. Well, that's all he had to say for rates to shoot up because everybody thought, oh my God, they're not going to drop rates in December like we thought. And so rate trending is doing this. Now they're trending down overall, but they're going to be highly volatile. And really, it's going to matter on what the Fed says next week. And there's a lot of clues coming from what we have to look at. So one of the things is the unemployment picture. So the unemployment picture is giving mixed signals. The government shutdown in October didn't help anything because it basically put a blackout on a lot of data. We're getting some unemployment figures that are saying unemployment is still a big problem. We're getting some figures that say, nah, it's not that much of a problem. And so it's which report do you trust? Well, the key is what's the Fed going to say next week is the report that they trust. What do they think is happening? Again, if unemployment is a problem, they'll lower interest rates. If unemployment is fine, they're going to keep interest rates high. And then today we had the PCE inflation report. It's just another report. There's 3 or 4 a month that come out that talk about inflation. And it said inflation ticked up just a little bit. That's not a good sign because the higher inflation, the more the Fed is going to keep interest rates high. So really it's about what does the Fed decide, not just next week, but what's going to happen after that, because Jerome Powell is out early spring. I think April is when he's out. He is the chairman of the Federal Reserve. That doesn't mean he makes all the decisions, but historically, the voting members of the Federal Reserve have voted with whatever the chairman wanted to do. He would convince them and they'd move in the same direction and they would do what he wanted to do. And now we're going to get a new head of the Fed, a new chairman of the Federal Reserve. And Trump is in charge of appointing who that person is going to be. He's narrowing down his list, but a lot of it's going to have to do with what are all of the voting members saying next week when they vote? Because there's more dissent right now. Historically, the Fed's always voted together. Now they're kind of breaking up into different camps, almost like Congress in Washington, D.C. is breaking up into different camps a long time ago. And now you've got them necessarily, you have them splitting up and not necessarily voting together. And so the question is, not only will the Fed cut, will they hold rates, or will there be some kind of a surprise announcement, but what are we actually going to hear about the consensus or unity of the Federal Reserve members? Or are we heading into a period of time where the Fed's going to be a body that isn't going to be working with each other, which is going to create more uncertainty, and with uncertainty typically leads to rates being higher. So there's a lot of things that are going on right now. And everybody's wondering, gosh, is rate relief coming soon? I don't think so. I don't think we're going to see a significant drop in interest rates. I think that we're in an environment where we have high inflation, we have high unemployment. That is a lot of what we dealt with in the 70s. And it's called stagflation. And we're really seeing a lot of indicators that we're going to be in that era, which typically doesn't allow for interest rates to drop. I don't expect them to go up either. But if I'm a buyer or a seller right now, I'm thinking about what are my family's needs and what can I afford to pay per month and what can I afford to pay out of pocket? It's that simple. Why am I trying to make this transaction happen? Not how can I time the market, because timing the market is almost impossible. It's luck of the draw. And yes, you could get lucky. You could also get unlucky. Flip a coin. You're just as likely to be lucky or unlucky by flipping a coin. Okay, so strategies right now, as far as what I think that buyers and sellers should be thinking in today's market, I've been covering that already in the last couple of minutes, which is, hey, now is the time to make a deal. Now is the time to negotiate, and rates are pretty good. We're tickling into the mid to low sixes on an FHA loan. We're tickling into the high fives. Rates are very, very good compared to what they had been, and it's a great opportunity to take advantage of getting a deal at the end of the market at the end of this holiday season. Realtors, you need to be communicating with your buyers and your sellers. You need to be reaching out right now. I know a lot of real estate agents take December off and think to themselves, "Oh my gosh, no, nobody's going to want to transact, and so I shouldn't really be doing anything." And the reality is, if you are a realtor in today's market, you need to be just having conversations with your past clients, with people who have talked to you in the past, because I'm doing the same thing, and I'm finding that there's a lot more people interested in doing something than they're willing to say. People aren't reaching out, but when I reach out to people, they're explaining to me a lot of things that they're trying to do. And so it really is a great time to make something happen. I'm super excited for the new year. That's pretty much everything that I wanted to cover. What I'll tell you is, if you have questions, feel free to post them right now. Big picture, we're going to know more next week when I talk to you on Friday. I'll have a lot more information about what the Fed did and what that's leaning towards. But if you are thinking about refinancing right now, it'd be a great time to reach out to me. Whether you want to consolidate debt, whether you're trying to pull out money to do something, whether it's a home equity loan or line of credit or a full refinance, now is a good time to be looking at doing that, because otherwise we're going to be in a time where rates are going to be highly volatile, continuing to be, and we're seeing appraised values coming down a little bit. And that's hurting people who are wanting to refinance. So it's something to be thinking about timing wise if you're looking to refinance. Aside from that, gang, hope everybody has an absolutely wonderful weekend. If you are within driving distance of my Roseville office, feel free to come by tomorrow between 10 and 1. You could find the address, scan the QR code. We're on Douglas Boulevard in Roseville. If you're driving from a little bit out of the area, come anyway, because you can go shopping at the Galleria. But we're doing Pictures with Santa. So please join us tomorrow between 10 and 1 for Pictures with Santa if you are in the Roseville, Sacramento, or local area, or hop a plane from LA and come on up and see us. I'm okay with that too. Anyway, guys, really appreciate you taking the time to listen to me today. Hope you have an absolutely wonderful weekend, and we'll talk to you next Friday after we know what the Fed announced on Wednesday, and we'll talk to y'all soon. Bye-bye.